Yo guys, welcome back to Stock Talk Insider. Today we'll be talking about the Honest Company, probably one of the most talked about stocks on this channel. So I want to give you guys a general overview of where we're at, what the company is, and then going forward into a financial snapshot, of course with coming earnings, what to watch for the earnings, and some key catalysts, some intrinsic value estimate, and also some current business momentum together with the past negative catalysts to watch and the key metrics to watch this quarter. So, having talked already too much, actually, we are going straight into the video. And the general overview is that the company is founded in 2012, for people who don't know it yet, by Jessica Alba. The focus was clean, sustainable, non-toxic consumer products for baby, beauty, and household. And the clean, sustainable, and non-toxic is something that's being more common. People are watching more what they're putting on their body, and especially with ChatGPT, like, well, all of those open source things, you can watch closely what is in the products, and people are getting smarter because of that, and more, well, they put more value in the things like the clean, sustainable, and non-toxic products. So yeah, just to close that thing off, we have ChatGPT. It makes it way easier for people to look up what is in their products, which brand uses which chemicals or something like that. And yeah, using then clean, sustainable, and non-toxic products, well, that's a positive catalyst for Honest, especially going forward and being it more and more, known for people to look for things like that. So the positioning is a premium eco-lifestyle brand, yet accessible. Key retail partners like Target, Amazon, Walmart, Whole Foods, and Ulta Beauty. The CEO Carla Vernón, appointed at January 9, 2023, was the former VP of Amazon Consumables and president of the Natural and Organic division at the General Mills. Known for operational discipline, brand focus, and sustainable expertise, under her leadership, Honest transitioned from volume growth to profitability, premium focused growth, emphasizing beauty and skincare. The mission: empowering people to live happy, healthy lives through trusted, clean products. So, of course, because we had a change in management, because Carla Vernón became CEO, appointed January 9th of 2023, so at this point 2 years or something. That was around, let me see, that was over here. Yes, this was the first quarter that they released when Carla Vernón was CEO, and since then we were actually re-accelerating a lot, because we had some trailing 12-month periods where it was actually, well, it was going up, but here it was just a mess. Somewhere from here it was just only a mess, and, well, not really going very well. But then Carla Vernón came in, and also with quarterly, you can perfectly see the upside going up. Of course, some bumps in the ride, but eventually it is very nicely going up. But before quarterly was actually very not going anywhere, actually, if I can tell it like that. So it was actually not really going anywhere. But now, since the period she came in, it was actually going very well and very nicely up. But yeah, going forward in white, maybe going down. We'll break that down in this video, and also what people are watching for, what investors want at the company, because as most people know, Honest and its earnings are consolidating. They are trying to make it more perfect, and they try to make it more quality, so that EPS is growing a lot, margins are growing a lot, and that just the sustainability of its earnings is very good. And after that, they can maybe go more into the marketing phase and bringing revenue up and the growth of the whole company, and especially, of course, the revenue again, bring it up to the maybe double digits, which would be nice and would bring the stock way higher than it is already. But of course, talking about stock price is already actually undervalued by half of what the stock price is, purely on the quality of how the companies run. And the only thing that's missing actually for Honest to grow, well, fast in stock price is the revenue growth. And also a couple of EPS misses, but, well, if you see from which period they came and what they are doing now, they are almost doing like their whole market cap in revenue each year. So only because of that already, we should be a little bit higher than we are already. Well, a little bit actually way higher than we are already for stock price, in my opinion. But the financial snapshot is that the share price stands at $3.45. Market cap is between 330 and 350 million. Revenue is 390 million. So at this point, with the stock price of today, we are doing more revenue than the company is worth. That's insane. So we have revenue growth, which was up from 4 to 6%. So we have now revenue growth year over year of 6%. Maybe we get to 7% with coming earnings. So the guidance was maybe being raised. Of course, a couple of months last year ago, something like that, we did have a downgrade on guidance, which brought us to 4% eventually. While we were actually growing 10%, but of course, as I said before, first priority now is stabilizing the business, and then revenue growth comes in coming years. And because of that, well, yeah, revenue growth will go down. But as long as we are growing, it's good. Even if it's 1%, if we have a stabilization of company and the company is still growing 1 to 2%, it's very nice for me. Now, we had 4%. It's already going back up to 6%. Maybe with a guidance beat, maybe with an earnings beat, we have 7%, and then guidance, maybe put it at 8%. That would be very nice. And the gross margin, also very important, which last earnings, which was between 40 to 41% of gross margin. So gross margins are going up, which is very nice. EPS lies between 3 to 5 cents. Free cash flow is positive for 3 consecutive quarters in a row. And net cash, and we have no debt at all. Cash lies between 72 million, so that's a lot for this company. So the interpretation is that the honest company is no longer in survival mode. It's entering a phase of steady, profitable growth with healthy margins and a solid balance sheet. What to watch in upcoming earnings, of course. So we have the revenue growth expected to be between 5 to 7%. If you get 7%, that would be very nice and very positive. Year over year, driven by beauty and skincare, we have 20 to 25%. Baby and household can remain flat as long as mixed margins improve. That's literally the case. It can be flat as long as the margins improve. If the margins don't improve and it stays flat, well, then we have a problem. Gross margin, maintain or expand above 40%. Margin gains driven by premium product mix and lower logistic costs. Operating income and FCF, target operating margin is, 2 to 3%. Positive free cash flow is $5 million, confirms structural profitability. And the guidance for 2026 is that revenue growth will lie between 8 to 10%. That's up. And we have a gross margin of between 41 to 42%, slightly up, and an EPS of maybe 10 cents, which is very nice. And we also have the launch of international expansion to the UK and the EU. Then the key catalysts going into the end of 2025 and beginning of 2026 is a beauty expansion, and that's purely on new skincare lines, Ulta, Target, distribution growth. The DTC channel is also one, so the direct-to-consumer penetration, 40% and a higher margins. The international growth, very important. International is always the big thing. First UK and the EU market. Entries in 2026 and maybe in couple years past that we have some other things, and the profit momentum, 4 consecutive profitable quarters could trigger re-rating, because that puts it at a whole year of consecutive profitability. Then the M&A speculation, potential acquisition interest from larger clean beauty and consumer players. That's actually some of the key catalysts. Not more to talk about there. The intrinsic value, probably most of you want to know this. These are my numbers. So based on 2030 EPS, the PE at that time, in my opinion, and the implied price of what that will mean is that the upside from $3.45 in a bear case with an EPS in 2030 of 40 cents, a PE of 25, and an implied price of 10, we have 190% return if we get to $10 in less than 5 years. The base case is 70 cents of EPS, a PE of 35, and we have an implied price because of that of 24.50. That's 610% upside from here. The bull side is we have 90 cents, so almost $1 in EPS in 2030, and we have 40 PE and an implied price of $36, which brings us at almost 1,000% of return, to be specific, 940. The DCF 10%, WACC 3% LT growth, which brings fair value to $13 to $15 per share. Current price reflects only 25 to 30% of intrinsic value. So that's all of my intrinsic value talks, and going further, we have the current business momentum. So there's a mix shift. Beauty and skincare now represent 45% of total revenue. Margins are 40%, the highest since IPO. The marketing is more influencer and earned media, less paid advertising, positive of course. Inventory management normalized with faster turnover. Retail is a strong partnership with Target, Amazon and Ulta. Certainly they need to keep that or even expand to other ones. Leadership, Carla Vernón is driving focus on profitability scale, brand strength and innovation of course. And then going forward to the past negative catalysts, those are a few. So we have the post-IPO crash, so overvaluation plus cash burn led to 80% decline. And now we have a valuation reset of $3.45 plus consistent FCF. The supply chain and cost inflation, so margins in, between 21 and 23 were 32%, now stabilized and growing above 40% margins. Too many SKUs, if inefficient product breed, and now at this time we have an SKU rationalization, sorry, I can't pronounce the word very good, completed. We have a heavy market burn, overspending on low ROI campaigns in 21-23, and the efficient ROI-based marketing is now going on in 25. The leadership turnover, so 21 we had the lack of direction, and now we have Carla Vernón since January 23, and now we are in 25 with a clear stable leadership and just missing the revenue growth, but already said why. And some insider selling concerns, so Jessica Alba and other sold post-vesting shares perceived negatively, and now in 25 mostly routine 10b5-1 plan sales for tax, no strategic liquidation. Vernón retains substantial holdings, minimal insider selling in 25, and sentiment around that is actually pretty normalized, to be said. A little bit more context in the insider selling, because people are always more concerned about those things. The insider transactions that drew attention in 24 were routine administrative sales tied to equity vesting and tax obligations under the SEC rule 10b5-1 plans, and not confidence-driven disposals. So Jessica Alba still holds a significant stake, and CEO Carla Vernón has not reduced her holdings meaningfully. No notable insider selling since mid-25. Just signaling restored confidence internally. Now, going to the key metrics to watch this quarter, coming up with the earnings this week. Revenue growth is the target 6%. Bullish signal is stable demand. The gross margins should be above 40%. Sustainable mix improvement. Net income is positive. Structural profitability, of course, because of the 4 quarters. That would be very nice, because then we can say that we are a full year profitable. And the DTC penetration of 40%, margin leverage, and free cash flow, very important, of 5 million. Durable cash generation. Then, the summary script of all of what we've talked about is that at $3.45, the honest company is deeply undervalued, in my opinion. Relative to its progress, of course. Under CEO Carla Vernón, since January 2023, Honest has transformed from a cash-burning consumer name into profitable, clean brand leader with 40% margins. The structural issues that once dragged sentiment, high cost, poor SKUs focus, inefficient marketing, and negative insider optics have largely been fixed. So going forward with 6% top-line growth, strong cash generation, and zero debt, Honest is positioned for sustainable profitability if upcoming results confirm this trajectory, a re-rating toward $8 or $10 like it stood at last year in 2026, and $20 by 2030 is realistic versus fair value today at around $40 per share, a small cap consumer stock with authentic brand equity, operational discipline, and asymmetric upside potential. So thanks for watching. If you have more questions about Honest or something else, let me know in the comments. I like to answer on those questions or concepts that are being talked about. So thanks for watching, and I'll see you guys later. Bye.